Hello, welcome to Arise News. You're watching the Global Business Report. Rhoda Sodiri here. We're in Lagos, Nigeria's commercial capital, and we've got a lot of business headlines to take a look at, starting with the Federal Reserve Chair, Jerome Powell, praising the labor market in the United States, saying it managed to avert a recession, also talking about a data-driven monetary policy approach. Google, according to the Financial Times, is considering charging for its AI-powered search. That would be a big change to what was previously free, its business model. Also in Nigeria, President Bola Tinubu signing the student loan bill, which is now an act into law. It's the Global Business Report. Do stay tuned. All right, let's begin with oil prices as we take a look at West Texas Intermediate and Brent crude. Of course, the OPEC yesterday leaving production in place. So Brent crude, look at that. It's practically $90 a barrel, $89.34. Should cross 90 if it already hasn't. Well, actually, if it's down by 0.01%, and it was probably closer to $90 already. West Texas Intermediate, that's the U.S. grade. By the way, the U.S. is the largest producer of oil in the world, just in case you were wondering. WTI 85.44. Natural gas at $1.80. But why does the U.S. still import oil? It's because of the grades. That's why. Moving to cryptocurrencies, the ever volatile cryptocurrencies, Bitcoin, which at one point touched $73,000. Looks like it's coming back down to earth. We got a special report where we looked at one of the best performing assets in the world in the first quarter of this year. 65% year to date. Let's go back to the cryptocurrencies for just a moment. 66,000 is where we're at with crypto. Ethereum, it's still dropping. I have to point out that Ethereum was once at $4,000, now down to triple threes. Okay, now we go to fiat currencies. A lot to discuss with respect to the US dollar against a basket of currencies. So we're seeing it weakening against the euro, also against the pound. The yen is still treading water, getting closer to that, we can call it a psychological line of 152, at which point the Bank of Japan has hinted that it might intervene. And again, they've been warning currency speculators against betting against the yen. So that's what we're seeing with fiat currencies. Let's go to the Asian markets. It's a holiday in some markets. So we've got the Shanghai Composite Index, which as at last it was checked, 18 basis points down. So is Hong Kong, and also the Nikkei 225 in Japan. All right, let's move to the European markets. And we see they've turned bullish. So they were mixed bearish yesterday. Again, 5 months of activity of tracking the very bullish Wall Street. Your pan-European stock index, that's into the green zone, 22 basis points. We're expecting, so this is of course on the back of inflation. We looked at Euro area inflation coming down closer to a 2% threshold that Christine Lagarde, the president of the ECB, has hinted they could cut rates as early as June. The market's like that, and we're seeing that reaction at the pan-European stock index. Your FTSE 100, or the real estate sector, is looking up over in the UK with your net mortgage approvals climbing, according to data from the Bank of England. So the market's like that. So we're getting bullish there. The DAX over in Germany, it's a similar story to what we're seeing across Europe. German inflation coming down. Energy prices, of course, hit Germany pretty hard. They had to subsidize energy for a full year. They removed those subsidies at around the midpoint of 2023. And so the markets do like the fact that inflation is coming down in Germany, which means that energy prices are coming down, which means inflation is coming down, which means your valuations for equities in Germany will look up, cost of capital and stuff like that. And that's why we're seeing Germany on the up and up. France, really not much to say there. But again, they're all treading towards that 2% target for the ECB. That's your European markets. Let's get to Jerome Powell. He was at Stanford, Connecticut. There's been lots of Federal Reserve Fed speak, as they call it in the markets. We had Mary Daly, San Francisco, also the head of the Cleveland, Miss Esther as well, speaking about the monetary policy path and how it needs to be data-driven. So here's Powell, who spoke yesterday at the Stanford Business School about the need to follow the data before cutting interest rates.
On inflation, it is too soon to say whether the recent readings represent more than just a bump. We do not expect that it will be appropriate to lower our policy rate until we have greater confidence that inflation is moving sustainably down toward 2%. Given the strength of the economy and progress on inflation so far, we have time to let the incoming data guide our decisions on policy. We've held our policy rate at its current level since last July, as shown in the individual projections that the FOMC released just 2 weeks ago. My colleagues and I continue to believe that the policy rate is likely at its peak for this tightening cycle. If the economy evolves broadly as we expect, most FOMC participants see it as likely to be appropriate to begin lowering the policy rate at some point this year. Of course, that outlook is still quite uncertain, and we face risks on both sides. Reducing rates too soon or too much could result in a reversal of the progress we've seen on inflation and ultimately require even tighter policy to get inflation back to 2%. But easing policy too late or too little could unduly weaken economic activity and employment. As progress on inflation continues and labor market tightness eases, these risks continue to move into better balance.
All right, two things that Jerome Powell keeps talking about every time he addresses the public. One, inflation. Two, the U.S. labor market. That's what he wants to discuss. Now, here he is talking about how the U.S. labor market, because of more people working as a result of immigration and so on and so forth, actually was partly responsible for the U.S. avoiding what was a doomsday call by many analysts and economists of a recession in 2023, still at Stanford University.
I need to start by saying that the Fed is not an immigration policymaker, and don't comment on those who do have that assignment or the policies that they make. It's really we're just calling the balls and strikes on the economy as we see them. And so from that standpoint, our economy's been short labor and probably still is. If you talk to, and we do talk to a lot of business people, it's still difficult to hire for many, many companies. So we've needed more people. But what happened over the course of last year is, to a much greater extent than had been thought, immigration moved up quite a bit over the last 2 years. And this is typically the Census Bureau does all this estimating. The Congressional Budget Office actually went and took a different path and talked to the people who work at the border and that kind of thing, and got a much higher estimate, which now many groups have gone out to validate. And I would say it's clear there's something there. The numbers are actually higher. And that actually explains what we've been asking ourselves, which is how can the economy have grown over 3% in a year where almost every outside economist was forecasting a recession? An overwhelming majority anyway were forecasting a recession for 2023. Not only did that not happen, we had better than 3% growth. So really a remarkable performance. And some part of that is that there are significantly more people working in the country, but then how does inflation come down? It's because the capacity of the economy has actually moved up perhaps more than the actual output. So it's a bigger economy, but not a tighter one. Really an unexpected and unusual thing. Again, we don't make judgment calls, but that's what we're seeing.
Efosa Aluyi, the head of investments at Sankore Global Investments, joins us to discuss further. Efosa, good morning. Thanks for joining us. Powell, his usual talk on the need to be data-driven for monetary policy, to dictate the monetary policy path. More of the same? What do you make of what he's been saying?
Yeah, pretty much. I mean, so you have to look at what has happened with inflation, right? Inflation has actually come off quite significantly since it peaked, I think, in July of 22 at about 9.1%. In fact, if you look at over a year now, where inflation was about 6% in March of last year, it's come down quite significantly, I'll say. However, it seems there is some kind of resurgence in price pressures, right? So from 6% in March of last year, we came down to about 3% in December of last year. However, in January, we picked up to about 3.4%. Now, it dropped again to about 3.1. In March, it picked up again to 3.2. Now, it's important for the Fed to see more data points to really get a clear sense of the path that inflation is on. Now, you have to look at the backdrop against the fact that the U.S. economy is really strong right now, right? The labor market is very tight as well, right? Unemployment is at its lowest in about 50 years. The economy is growing very strongly. Q3 GDP for last year was 4.9. For Q4, it was 3.4. That's really strong growth for an economy that was expected to go into a recession last year. So you cannot afford to ease monetary policy at this time. If you do that, you will just create significant inflationary pressures. I think that's the concern for the Fed, and the Fed has to see and be clear that inflation really is on this downward path for it to then, consider rolling back, the tight monetary policy that had been in place before now. It's important to note that the Fed really wants to, dial back on those, but it's important for them to see the data supporting, what they are looking to do. So I think that's the conundrum, if you will, for the Fed in this situation.
I want to talk about foreign direct investment. Financial Times yesterday breaking the news that, according to sources, Tesla is sending scouts to look at India, some areas to build possibly a $2 to $3 billion factory there. Elon Musk, of course, he met with Narendra Modi sometime last year. What do you make of that development there?
I mean, this is the whole idea where Tesla is essentially looking to expand even more, right? India is also a very big market, right? Right now, it's the fifth largest economy in the world, so the potential there is very strong. But it's beyond India, right? You're looking at the entire South Asian market. So they're essentially looking to create a hub in India where they would produce, and also looking at the sort of models that they will produce. So they're not going to be doing the expensive models. They're going to be, kind of bring it down a bit to a place where it's, somewhat more affordable to serve that entire South Asian market. So it's not just going to be India, but critically, the fact that India has also gone ahead to implement certain concessions that has allowed, Tesla to make this move is also very, very important. And it tells you that India is really strategically positioning itself to become the manufacturing hub of the world as well. This whole Make in India mantra has been on for some time now. So this is essentially a continuation of that strategy really from Narendra Modi.
Okay, so you've talked about the Make in India strategy. We have a Make in Nigeria strategy. I had a wish list about 8 months old where I was, wishing into the heavens that the Minister of Mines and Steel could somehow be able to bring Mr. Musk himself to Nigeria, or maybe Rio Tinto, all those other big mining companies. So what's the lesson here? What do we have to do? Because we got lithium, we have all these products that you need to make electric batteries for electric vehicles. Well, what's the lesson? What do we need to do?
Well, we've got to have the right policies enacted, right?
Yeah.
It's very important. And there has to be a lot of executive backing behind those policies. I mean, we're never bereft really or short of, the right policies. I think the implementation has always been a challenge for us as a country. So we need to put the right policies in place that make sense to these people. Beyond the policies within that sector, again, broad macro stuff has to, look like it makes sense, right? Basic infrastructure, security, all these things need to be taken care of for us to even begin to have those sort of conversations, quite honestly.
Yeah. Okay, look, still on Elon Musk, I have to ask you about, you saw Tesla's deliveries for Q1 2024. They underperformed Wall Street. I think the stock is down about 30-something% year to date. Some folks have been attributing it to his behavior. There's even an article out there that literally says that Elon Musk's behavior is deterring would-be Tesla customers. Well, what do you make of that? Is it possible he's polarizing buyers, or is it fundamentals?
I mean, not to get very political, but I think so, right?
Yeah.
So his views from a political standpoint have been largely strongly on the right, right? And then you have, a broad base of people who are patronizing this technology leaning towards the left, right? So it creates some sort of polarization. Unfortunately, that brand is really tied to him at the end of the day. All of the strong performance that we've seen in the past were really intricately linked to him. So if you see anything happening to it today again, it really has to do with him, right? So, and that's why before now there had been concerns, and there will still be concerns around succession, right? So what happens to Elon after, if anything happens to Elon, what happens to Tesla? So he's intricately linked and tied to that brand. So obviously his views essentially irking the other side, who essentially form a significant portion of those that consume that product, certainly will have an impact on the sales that Tesla is seeing. And I recall that, EV sales is actually projected to grow about 15% in the US. So if it's coming off for Tesla, then it seems more like a Tesla problem than an EV issue, really. And obviously intricately tied to Elon Musk.
Yeah. Okay, great stuff. Disney, there was a massive boardroom showdown that went down yesterday. Bob Iger versus this Nelson Peltz, activist investor fellow. Iger ended up winning. What did you make of the outcome, and I guess what the path forward for him now running Disney?
Now, I think it was a really strong vote of confidence really on Iger. I recall that Iger had left, had to come back, So it tells you the kind of iconic or legendary status that he's got within Disney, and that the shareholders actually want someone that they believe in to run this company and put it back in a pride of place. So that's what really happened. The move, by this fund to try and take over, it was a strong one, it was a good one, but at the end of the day, I think that the legacy that Iger has actually left in his first coming has played a very significant role in what has happened. So the shareholders are essentially saying, look, we know this guy, we trust this guy, he's the guy that's going to turn things around and put us on that pedestal, so we want to go with him. That essentially is what has happened, really.
All right, to round off, I will have to get your thoughts on this. Google, the FT is saying that Google is considering charging money for its AI-powered search, which would, I guess, look like a shift from its business model. What do you make of why they would possibly be doing that?
I think at the end of the day, these are still considerations, right? Google makes easily about 70% of its revenue from ads, and it's a fickle space because where people consume ads have moved over the years, from your billboards to TVs to YouTube. Now you have stuff like TikTok and all of that. So that keeps moving. So it's important for Google to reassess that business model and get a proper sense of how it's going to continue to protect and build moats around that ad revenue space, which can be difficult and can be tough. So I think these are considerations that is basically mooting to see how it can, number one, protect its place in terms of ad revenue, and also stake a fight in the AI industry, which it essentially kind of got upended with the OpenAI launch last year, and it doesn't seem to have really recovered from that. So it's doing a lot of stuff to try and stake a claim in that space. Only recently, I think it's had talks with Apple to incorporate that into Apple phones. We'll see where that goes. So all these are moves really by Google to try and stake a claim in that search space and see how it can protect its revenues even going forward.
Efosa Aluyi, Head of Investments, Sankore Global Investments. Always a pleasure having you, sir, to discuss these businesses. Thank you so much for joining us.